So tax day on the 23rd of March came and went with no major shocks. Thankfully, we had no big consultations on capital gains tax and no big consultations on inheritance tax and no big consultation on pensions and pensions tax relief. Doesn't mean we won't get them at some time in the future. 5 of the moves, announcements, consultations in tax day attracted my attention though. First one was to do with bringing forward the date of tax payment. So closing the gap between the date you earn money, which is then assessed under self-assessment, and when you pay tax on it, the revenue have got smart to the power, probably already smart to it, but to the power of cash flow. So there will be moves made to make paying tax more real time. You know the deferment you get if you're under self-assessment between actually getting the money that's going to be assessed and paying the tax on it. So the revenue will be looking to HMRC to give them their proper current name. We'll be bringing forward, closing the gap between earning the money and paying the tax. Then there was work to be done, continued consultation on just tackling non-compliance, and that will take the form of much harsher sanctions on the promoters of tax avoidance. So neither of those two things directly affect the work of financial planners, the harshening provisions on promoters of tax avoidance or the closing of the timing between earning money and paying tax on it under self-assessment. Of course, if you're paid under PAYE, you already pay your tax very quickly. Tackling inheritance tax. Now, no major consultations, as I mentioned, but there is a pickup from the first report of the Office of Tax Simplification in relation to simplification of inheritance tax. Rather shockingly, it seems that only 5%, this isn't shocking, but 5% of estates pay inheritance tax, and yet 50% of estates have to fill in the forms. So there's all those people filling in forms, nearly 250,000 sets of personal representatives filling in tax forms, and it ends up that hardly any of them have to pay tax. So the revenue are going to get rid of that and also make inheritance tax more digital. So when you do complete the forms, you can do it online, which you currently can't do. So really important, that move for simplification, but again, not to the heart of tax planning. Trusts. Trust, there's going to be something on trust. I thought that was all home free. It is. They just referred to the fact there was a trust taxation consultation issued in 2018. Lots of responses were made. No changes were made. Nothing happened. We haven't heard anything. And they kind of just, we've got closure on that with HMRC saying, actually, trusts are all right. So we can be reassured by that. Trusts do work. The revenue accept them. There are no major tax changes proposed for trusts. And the last point was around actually just raising standards in tax and tax advice. What does that mean? Basically, making sure that people who give tax advice basically have professional indemnity insurance. They pay more than lip service to the fact that you should be properly qualified and you should do your CPD, and they'll be liaising closely with the professional bodies in relation to that to just do a bit more learning. But the main immediate change coming out of that was a likely future retirement requirement. They are consulting on this, that people giving tax advice will need to have professional indemnity insurance. Now, tax advice was defined as, well, they gave a number of examples, but one of the examples that stood out to me in relation to financial planners was that giving advice would incorporate a financial advisor who, in the course of providing investment advice to a client, I'm reading, that's why my eyes have moved, advises on the most tax efficient way to invest, which will cover so much of the financial planning that goes on. I'm going to have a look at that in a bit more detail, but can give you reassurance in a kind of EastEnders moment way, but can give you reassurance until that next episode, that for most financial planners who have professional indemnity insurance, this will not cause any significant change to be taken into account. Boom, 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 boom. See you next time.